So last of all, let's think about how this may apply to the world of real estate. Well, I think I can see three applications. That there will be more, but there are three that there are many projects going on around the world in these areas. One is the area of land registries and title, as I mentioned, where it's possible that the title to a property can be represented by a digital token, if you like, a Bitcoin for property. And it's also possible that that token can be programmed not just to represent the overall title, but even all the covenants and easements and the areas where the owner would want to be able to enforce their rights. They will all be represented in this token, and this is stored and represented on a secure blockchain, which is immutable and transparent, and anybody can check the veracity, the truth of it. And it would also potentially enable the trading, the conveyance of title to have some of the friction taken out of that process. There are projects running in the Caribbean, in India, in the Philippines, where there has been, if you like, a poor representation of title on the centralized old system, and people are doing exploratory projects for putting title deeds on a blockchain system. The second area where there will be movement between real estate and property is with building management and smart cities, where, for example, you can imagine a scenario where a WeWork office building, you go in to use the conference room, and WeWork, for example, if it doesn't go bankrupt next week, WeWork has a token that they use as for their, if you like, the WeWork economic system. And once you've been in the conference room for an hour, you're automatically deducted from your token wallet a number of WeWork tokens for using the conference room. Or you plug your electric car into the charger in the underground garage, and automatically you're paying for the electricity through your WeWork token, and your car is charged. Now, those would be smart contracts, self-executing contracts that are working on the blockchain, that would allow for a building, or indeed buildings, a smart city, to work in a seamless way with less friction or less intermediaries to allow people to go about their daily business. Well, the third and last area that I'll focus on in terms of what's happening with property and the blockchain is real estate investment. So the tokenization of investment into property. This is a picture of the St. Regis Hotel in Aspen, which was tokenized, I think, 30% of the value of the hotel, I think around $30 million of this hotel was tokenized, and those investments were made available, and investors were able to buy tokens that represented a fraction of this hotel. So what is happening when you are tokenizing property? Well, you're effectively democratizing ownership, and we're seeing movements in this direction from platforms like Property Partner already. You're making ownership fractional, even down to a very small level, because a token could represent a pound, a dollar. And you're making investment more globally accessible. And then one of the key hopes from using a tokenized investment system is to increase liquidity. So effectively, you're able to do a mini IPO of a building much more quickly and much more cheaply than you would using the normal public markets that we would have access to. So if you wanted to IPO real estate on a public exchange now, it's going to cost a minimum of hundreds of thousands of pounds, if not more. Whereas you could be tokenizing a property, which you could call a mini IPO, for a matter of thousands of pounds. So it makes issuance of the share a lot cheaper, and in due course, trading of that token will be something that's available. It's a regulatory hurdle at the moment, but trading will maximize liquidity, and liquidity brings a premium to price. Therefore, a building or a real estate investment that does have liquidity will automatically have an uplift in its value compared with one that doesn't. Another project that actually I don't think ultimately got off the ground was the tokenization of a purpose-built student accommodation block in South Carolina. Now, this This is the roof garden of the student accommodation. I think it's 900 beds in South Carolina. I mean, they've only got 2 swimming pools and a mega jumbo screen and several bars. And this was the tokenization of a real estate investment trust. That was the aim of the project, and they were selling tokens for $21,000 each, I think. But I don't think that one got off the ground. But a project that did get off the ground was much closer to home in Nottingham, and it was one where protocol partners Clemens and I came in to help launch and successfully deliver the project, and that was the tokenization of a student block in central Nottingham on the Smartlands platform. So Smartlands is a crowdfunding platform built on the blockchain that enables the tokenization of private equity, and in this case, private equity in real estate. And this is the block, and Smartlands made 30% of the value of this block available to investors earlier this year, and the project was successfully completed. So our role working with Smartlands to deliver this project was to ensure that they had full FCA authorization, because effectively, you know, you're promoting an investment in a security, and 30% of the equity in this building was tokenized. 1 token equaled 1 share, or the interest in 1 share. So technically, it wasn't an actual share in the company. It was a representation of the beneficial interest of 1 share, which gives the token holder the economic rights that a shareholder would have. So if you came onto the Smartlands platform, you'd be able to buy one token or many in this student block, which had a projected return of around 16% all in. The system would run full anti-money laundering and know your customer checks on the investors. The cash or the cryptocurrency that was taken in on the platform, that was converted immediately to cash. The cash was held in escrow, or is held in escrow, by Coutts Bank. The shares that the tokens represent are held by a custodian called Globacap, that is a new blockchain financial institution. And this has been the first retail investment available through tokenization globally. So Nottingham has not just a UK first, it's the first property in the UK to be tokenized, but actually globally, it's the first investment that has been made available to retail everyday investors rather than high net worth accredited investors. Now, that happened, it was successfully executed. And now the question that comes after that is the secondary trading in these tokens. You may have bought 100 tokens in this building, and you might think, well, you know, I'd quite like now to get out of this investment in a few months' time. And the ideal and the aim is that on your app, you'll be able to buy and sell tokens. But that's a further regulatory hurdle that needs to be addressed and is in the process of happening. What's interesting is that this is a question that's being asked actually around the world. And the UK is far ahead of most places, and certainly far ahead of the USA in innovating its financial markets to allow this kind of project to take place. You would not be able to tokenize a building in the US and sell those tokens to Main Street everyday investors. You'd only be able to sell them to family offices and high net worth individuals. So that is the third view of how blockchain is going to impact the real estate industry. So thank you very much. It's been great to spend some time with you this morning. If you'd like to get in touch with us, these are our details, and we'd love to take any questions if you have any.